Okay, in this video we're going to talk about going from a sole proprietorship to incorporation, and when is a good time to incorporate, the different reasons you would want to incorporate, and some of the tax reasons that you should incorporate. So reasons to incorporate. There's a variety of reasons to incorporate. Um, so some of them are tax, some of them are legal, and some of them are other. For tax reasons, there's ability to defer your tax. There could be some tax savings, and there could be some benefits when you enter the company or when you enter the corporation or when you are exiting the corporation. And there's also some drawbacks to consider. You're going to have more administrative costs and more administrative work. You're going to have 2 tax returns to file rather than just one. And you're going to have, so you'll have your personal tax return still, and then you're also going to have the corporate tax return. And as well as there's going to be additional paperwork with needing an additional bank account, because you'll need a corporate bank account. And this actually could be a good thing because it's going to mean you're going to need to separate your corporate expenses from your personal expenses. So that could be a good thing. And there's going to be more legal paperwork, including dividend declarations if you pay yourself a dividend, and you'll need to file an annual report. And there's going to be setup and ongoing costs. Fees to incorporate typically start at $1,000, if not a little bit more than that. There's annual filing requirements for filing the annual report, and lawyers typically charge around $350 for that. And there's annual accounting fees, and this can vary significantly depending on what you need and your accountant. It could be between, I've seen a range between $1,500 and $4,000. Typically, it could be more, could be less depending on what you need. So let's talk about some of the tax advantages. So one of the main reasons that people would incorporate would be to save some tax. And the reason you're able to save tax in some cases is because the corporate small business tax rate is only 11% in BC currently, whereas the personal tax rate, it starts at 20.06%, and then it goes all the way up to 53.5%. So it starts off way higher. It starts off about double what your corporate tax rate would be, and it just goes up from there. So if we look at an example, if your business makes $250,000 in net income and you were incorporated, you would pay 11% times 250, which is $27,500 in corporate tax. If you were not incorporated, you would pay $90,000, $90,395 in personal tax. So in this basic example, it assumes that you're going to be reinvesting all of the money back into your business and not taking out a dividend or anything like that. And if you were to do that, you would have $62,895 more to reinvest in your company if you were incorporated. So that could be some real tax savings for you. Income control, another reason to incorporate, another tax advantage to incorporating is when you incorporate, you can control how much of a salary or dividend you draw from the company. So that could mean you can stick with a steady salary and keep your income relatively low. And if you're not incorporated, you don't have that ability to choose how much income you're going to draw. If you have a great year, you pay a lot of tax. If you have a bad year, you don't pay much tax. But there's no ability to smooth that out. So you overall will pay more tax if you're not incorporated. Another tax advantage is there can be a tax deferral if you plan things properly. So when you incorporate, you have the ability to pick your year end. You can choose a date that will be advantageous to you so that you can pay your tax as far into the future as possible. For example, if your business started operating on September 1st, 2020, you could have an August 31st, 2021 year end as your first year. In this case, Income you earned from September 1st, 2020 and beyond would be taxed with the due date of November 30th, 2021, which is 3 months after your year-end date. This is much later than if you were a sole proprietor, because if you had not incorporated on September 1st, any income you earned from September to December would still be taxed with the rest of your 2020 income, and it would be due on April 30th of 2021. And another strategy is to use a bonus. So when you are using a bonus with proper bonus planning, you can put off paying your personal tax even further into the future. In the above example, if you declared a bonus on August 31st, 2021, which is your year-end date, as long as it was paid within 180 days of your year-end, it is deductible to the corporation. That means if you pay the bonus on January 5th, 2022, which is within 180 days of your year-end, it would be taxed in your 2022 personal tax return, because that's when you received the bonus. That would go along with your 2022 personal tax filing, and your personal tax would be due on April 30th, 2023. So that income that you earned in September 2020 is deferred until September 30th, 2023. So that can be 2 years later than the sole proprietor's tax. So this is an example to show how you can get a tax deferral when you've incorporated.